Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Something that we were talking about in our latest Minds in the Markets piece had to do with what's going on in the emerging markets and how that could be impacting things in the equity arena, specifically on an index front. So usually the two main countries, or I should say the significant country people have been talking about, is China. But now India is beginning to come more and more into the fold. Give us a little sense. What should we be looking at with respect to indices in China and India?
And there's two or three things coming and going at one time in 2024 and 2025 with respect to India. One is just that there's this natural melt up. If you look at the last 5 years, I mean, think about what has been occurring in Chinese equities. It's just been declining. It's red ink everywhere. And at the same time, this is happening amid a generalized global bull market. And so what ends up happening is just think naturally, just you have an index where China, which might have been 50% of an index and it becomes 45, becomes 40 and so on. And then some other country that's melting higher becomes a significant force. And then you get to this situation where inside MSCI emerging markets, India is almost as big as China at this point. And we, of course, have, I'll defer to you, the fixed income guru, but we've got index inclusion over in the emerging side for the nation of India. I think that has implications, bullish implications for Indian equities.
You know, the other aspect to this is just from a macro perspective, right? We're always talking about how resilient the U.S. economy is. And, is there enough focus being placed, say, on the Chinese economy? And perhaps more importantly, what about the size of India's economy in a relative stance?
I'd say that an India bull, that's probably one of the 3 or 5 key points that'll be the thing that gets mentioned to catalyze the run in India continuing outside of 24 into 26 or 27 or some year like that. Because if you think about the GDP pecking order, India's been leaping all the prior emerging markets, but then you have these two big developed markets that are number 3 and number 4, right? The US is number 1, then China, and then you have Japan and Germany. And in the next 3 or 4 years, to hear firms like Jefferies Morgan Stanley, many shops are basically saying, okay, by the back part of this decade, that's when India may or may not jump some big players. And then, okay, so now you're at 2030 and you're now the 3rd largest economy at that point. You have Goldman out there. This is way after, I would hope long after our careers are over, but by 2075, for what that's worth, Kevin, that it would be the number 1 economy. And that's what Goldman is saying. So it's really, you start thinking about index inclusion, index weights, something like an MSCI All Country World, which is the benchmark of benchmarks for a global basket. India is 1.8%. And what's the US? Like 60-something%. So it's just a very, very lopsided, almost structural underweight to this country that's splashing the headlines.
So, I mean, do you think it's crazy for investors to begin thinking about, say, a Chinese or Indian economy as not necessarily emerging market? That is it moving into more of a developed world, right? I mean, in bond land, right, we talk about fallen angels and rising stars for credit ratings, but let's look at it from a macro point of view. Is the Indian economy becoming a rising star? Should it be looked at as more of a developed economy?
Well, I've been critical about this concept for my whole career, where we just say, okay, here's the US, and then here's the developed world, whatever the heck that means. And then here's the emerging world, whatever the heck that means. Basically what they did was, like 40 years ago, they smashed everybody together and said, all these countries, various languages, various cultures, various economic systems, you're all in one big basket here. And we're just going to call you emerging. You got nothing to do with each other. You might be hostile to each other, but you're all in the same basket. And I think that is, we'll have to see how it goes, because, I mean, a lot of us are bucketing these things as developed and emerging. But sooner or later, you have to start saying, okay, do I have a line item for this economy that is going to be, well, we would think, the 3rd largest economy in the world? Or are we still going to start continue cramming it in there with China and Taiwan and Brazil and the rest of the gang, it's almost like the portfolio development thesis that we can get as an industry, easier said than done, away from these baskets and really start thinking about, okay, we have the one line item for the United States. Is it time to start thinking individual countries? So if that should come to pass, big question mark on that, that would be one of the big bull catalysts as well, because then in your money management firm, you now need to create an India team where there might not have been an India team before that.
I mean, just an unbelievable point to be made there, talking about the baskets, how we think of things rather than, say, a country line item like we do for the U.S. I mean, even in the developed world space, we very rarely do you have a one line space for Germany or France. So yeah. I think that's a great way to to end the conversation. Any final thoughts, Jeff?
That's it. I mean, it's just, that's the concept. We say, oh, Europe. What does Europe even mean? Should we have a line item for some of these countries? And I'll tell you, just based on the inbounds at Wisdom Tree, that's what we're starting to get. People in the last 3 or 4 years saying, okay, I need to form a specific opinion on China at least, and a specific opinion on India at least. A lot of the other countries, I mean, you just don't have the bandwidth to do it. But you're starting to see it, at least among the 5 major economies. You've seen a specific line item for Japan, specific line item for India, specific line item or exclusion of a line item for China. And it's maybe that's where portfolio allocation is evolving.
Yeah, absolutely. So I think we'll end it there, Jeff. Thanks for everybody for tuning in, and have a great rest of the week. And we'll be back with you in a couple of weeks.